In today's video, we're going to discuss two new possible anchors for Yieldmax funds, XPAY and XMAG. Maybe they can compete even with Cornerstone funds. Yieldmax and Cornerstone help me earn over $400,000 per year in dividends, and of course we use some margin here at this channel. And with our approach, we're outperforming all of the indexes year to date. We're up 34%, or 35 if you're rounding, 35% year to date. The S&P is up 21, the Nasdaq's up 22, the Dow's up 11, the Russell's up 8. We're also down 25,000 today, or 1.65%. But if you look above, that beat the indexes. We beat the Nasdaq and the S&P. So the S&P was down 1.86, the Nasdaq was down 2.76. We were down 1.65, even with over 600,000 in margin debt. We're living financially free out of our brokerage accounts using Yieldmax, Cornerstone, Defiance, Roundhill, and some margin. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. I was really proud of our performance today, okay? Being down 25,000, it seems like a lot on a down day, but again, being down 1.65%, even if you go to my complete view and look at my total performance, okay, factoring in margin as well, we're down 2.78, which again, the Nasdaq was down 2.76. So the Nasdaq barely beat us, and that's amazing considering the fact that, again, we have over 600,000 in margin debt. This is all thanks to Cornerstone today. Cornerstone was down fractionally, okay? It wasn't even down today. And CRF was down minimally. So CRF was down 0.24 and the index was down over 1%, almost 2%. Okay, and Defiance, it was down 2.3, whereas the Nasdaq was down again almost 2.75. So Defiance was down less than the market today, and Cornerstone was down fractionally. And we're at 50% in Cornerstone, as you can see here. Okay, CLM is 50%, CRF is 31%. We're down in QQY, we're down 65,000 on paper, but when you factor back in dividends, we get between 10 and 20,000 per month in dividends from QQY. So again, if you add up all those dividends over the last 12 months, you can see that we're way ahead in QQY. So even with all of that margin debt, once again, we outperformed today thanks to Cornerstone, thanks to Defiance, and now we're going to discuss if we can use two new possible anchors for our account, XMAG and XPAY. Can they really compete with Cornerstone and Defiance? Remember with Cornerstone that it is a 5-star fund and it moves upward, left to right on its chart according to Morningstar, as you can see here. But on a 10-year chart for Cornerstone, it moves sideways to down. That's because you have to factor back in dividends, drips, and rights offerings for closed-end funds like Cornerstone. If you need help playing Cornerstone, that's in my Volume 4 e-guide. Make sure you play this fund properly around its rights offerings, and when you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcements. So this is how we're all getting ahead in our portfolios. It's with Cornerstone. It was down less than the market today on a big down day, and it moves upward, left to right on its chart. Even on a 1-year chart, it's blowing away the Nasdaq and the S&P on a 1-year chart. So, you know, we've made it to new highs, whereas QQQ is back at the old highs. So we're making new highs with Cornerstone, getting a 20% dividend with Cornerstone, and it drips that dividend down at the NAV for 22% gains every month. So you get the 20% dividend on average with Cornerstone every year. Then you get the 20% premiums on average every year, and then you drip those 21% dividends down at the bottom for extra money every month for now 22% gains every month. So Cornerstone is a 5-star fund for a reason, and nothing can really compete with Cornerstone. Can XMAG compete with Cornerstone? Can XPAY compete with Cornerstone? Well, let's look into these funds now. So XPAY is a new fund by Roundhill. They emailed me and asked me if I could push their fund today. So since members in the Discord chat room are talking about new possible anchors, we have over 1,000 members here in the Discord chat room pursuing the FIRE lifestyle. If you have any questions about your brokerage account that I can't answer, someone in here most likely can. Discord is for the rights offering announcements. So a lot of people talk in Discord. We have a lot of conversation happening here in this Discord chat room, but I can't keep track of all those comments. So please make sure to @ me in Discord if you want my response. Otherwise, I just use Discord for the rights offering announcement. All right. So that's how we level up our account with Cornerstone once again. But XPAY is another fund that might compete with Cornerstone because it has a 20% dividend, just like with Cornerstone on average, and it's going to give you return of capital. Okay, return of capital is tax-free until you sell. So you want return of capital because, again, that's really good for our dividends. As long as you don't sell, you don't pay taxes with return of capital. But Cornerstone's also ROC, or return of capital, and it drips that 20% dividend down at the NAV for extra gains every month, 22% gains every month with CRF. So I don't see how XPAY can compete with Cornerstone if it has a similar dividend. They both have ROC, but Cornerstone actually has that drip at NAV feature, and it moves higher on its chart, okay? It gives you 20% premiums on average, but Cornerstone has had upwards of 40% premiums, even 45% premiums in 2021. So I don't see how XPAY can compete with Cornerstone. Also, Cornerstone is 30% maintenance. That's the whole key to living financially free out of your brokerage account. As you can see here, 30% maintenance for CRF. But XPAY is 50% maintenance. That sucks up half of your equity, okay? If you need help understanding maintenance, that's in my Volume 3 e-guide. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of this over $1 million in purchasing power to get ahead, and then my dividends pay back my margin debt in around 1 year. Again, this margin debt does not show up on a credit check to banks, so this is how I really get ahead out of my account. I can use this margin debt and be at a profit every time because my dividend yields of 20% with Cornerstone or 50% with Defiance beat the interest that I'm charged here with my margin, which is around 6%. I've negotiated down twice. Many of my clients who bought my e-guides did the same thing, because when you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, so keep that in mind. I'll text you the script to negotiate your rates down whenever you're ready. You can also call me and ask me whatever questions you have about your portfolio. But the key is not using all of this purchasing power. You just want to use a small amount of that, and you want to keep your available withdrawal high, all right? When this available withdrawal reaches zero, you're in a margin call. But we can withstand over 20% corrections at all times because we have low maintenance names, all right? Again, low maintenance is the secret to living financially free out of your brokerage account. So XPAY is 50% maintenance. Cornerstone is 30% maintenance. All right. So I don't see how XPAY can compete. I mean, it doesn't have that special drip. It does have ROC, but so does Cornerstone. Cornerstone has higher premiums. It has the same dividend, and it has half the maintenance. Okay. 30% maintenance. You can go to other brokers with lower maintenance, but they might not have that special NAV drip for Cornerstone. So please keep that in mind. All right. So that's XPAY by Roundhill. Moving on to Defiance, we have XMAG. XMAG is supposed to be like the S&P 500, but it excludes the Magnificent Seven. So if you think that the S&P is too dominated by tech, this way you can have exposure to the S&P without that volatility from tech. So today we saw Cornerstone was down fractionally. It was even up some parts of the day. And then also we have our staple stocks, okay? My staple stocks were up very well today. As you can see here, staples were in the green. I mean, Altria was even up almost 7%, okay? So we have Altria here, Mo up 7%. We have, Disney up 1%. So consumer cyclicals were up today. Kenvue, which is Tylenol, it was up a little bit fractionally. I mean, Target up 1%. So we have our staples names that were up today helping us on a down day. All right. So Cornerstone helped us on a down day. Our staples helped us on a down day. Our healthcare helped us on a down day. Even energy. Okay. Chevron, Lamb Weston, United Healthcare. They're up today on a down day. And that's kind of why I like XMAG, because XMAG excludes the top, tech names in the S&P, which often skews the results of the indexes, because as you can see today, the Nasdaq was down 2.76. That took the S&P down by 1.86, but we have many other sectors in the S&P that were up today. So it might look like the indexes are down, but really it's just tech that's down because it's had a big run, and then the other sectors within the indexes are up. So you have to keep that in mind, and that's why I kind of like XMAG. It's kind of attractive in that sense, but I don't know what the dividend yield is going to be yet. Maybe it's going to be around 20 or 30%. And also XMAG is 50% maintenance as well, XMAG. And I don't know if you want to leave out tech as well out of the indexes. I mean, they're a big driver of the index's growth, so I don't know how that's going to work out with XMAG, but 50% maintenance, here it is. It sucks up half of your equity, and that is a problem. I prefer Cornerstone because it has 30% maintenance. We don't have enough information on how these are going to trade yet, but XPAY, I don't see how it competes with Cornerstone, and then XMAG with Defiance, I see that as being something different, something attractive. We're going to see how this works, but instead of using this kind of fund to get my exposure to the S&P, excluding the top tech names in it, I prefer to just buy the stocks, as y'all saw, because a lot of those stocks, I buy the underrepresented sectors in the index, okay? We have 10 sectors in the index. So if you take away the top tech holdings out of XMAG, and then underneath the top 5 sectors, you have those bottom 5 sectors that are underrepresented in XMAG. I don't see how you're going to get that rolling correction exposure. When the Nasdaq was down today, you saw those other sectors up, but XMAG was down for us. So XMAG was down 0.96, but again, many of those other sectors that I own within the S&P, those bottom 5 sectors, they were up today. So I'm not sure how XMAG is going to perform. I'll keep a small amount in it for now, okay? Many of my members who follow my live portfolio service know that I keep this at about 5,000, okay, nothing much. And then I anchor the rest of my Yieldmax holdings with Cornerstone and Defiance. Okay, so once again, even with this over 600,000 in margin debt, we outperform the market today. You would think with all this leverage, we're getting absolutely killed today, but that's because we have Cornerstone and Defiance, which move down less than the market on down days. We have our staples plays and our diversified blue chip stock plays. And then we also have our put options. Okay, our put options were up over 50% today. And I always keep my put options on because I can withstand over 20% corrections at all times. But if we were to get a real crash in the market, then my put options will make us more money than we lost, okay, potentially. If we had a 30% crash or a 50% crash, we would make more money in our put options, I'm convinced, than we would lose in our overall account. If you need help insuring your portfolio with put options, that's in my Volume 5 e-guide. All right, so we're living financially free out of our brokerage accounts using Yieldmax, but we anchor Yieldmax with Cornerstone, Defiance, and some Roundhill funds. But we're up in our other stocks today that are underrepresented in the indexes, and I prefer getting my non-tech exposure through those stocks rather than an ETF like XMAG that's 50% maintenance, and it was down on a big day today. It was down 1%. And it might not move up the same way as the S&P because it doesn't have any tech in it. But we'll see how it goes, okay? Nonetheless, we'll see how it goes. I'm keeping a small amount in XMAG to see how that trades. XPAY, I'm probably not going to buy any of that. I'm just going to use Cornerstone as my way to anchor my portfolio and get return of capital with the 20% dividend. All right, we're getting this outperformance of the indexes. We're up 35%. And again, that's thanks to the unique combination of funds that we use with this margin power. Also, if you like my video and you want more videos like this, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.